What is going on? Today is fun fact number 4. I am super stoked. We are going to be talking about, and as in my previous videos, I've done the 3 other fun facts on the possibility of a housing bubble, the housing crash that folks seem to have this mindset on. And so we're going to be talking about the probabilities. And so in today's fun fact, we're going over the quality of the buyer, the quality of the loan products that are being put out today. Back in the 08, during the great financial crisis, the loan products that they were doing back then for buyers, and then what are the loan products that are being put out today, and then the quality of today's buyer. So we are going to dive in with my good friend with Cross Country Mortgage, Tyler Beard. So let's dive into it. Okay, so here we are with my man Tyler Beard with Cross Country. As I be your trusted real estate resource, Tyler is my trusted lender resource. So as I was explaining earlier, our focus is going to be on the quality of the buyer. What was the buyer like? What were the products like before the great financial crisis? And then, kind of what is it today?
Yeah, let's talk about this. So it gets brought up all the time, right? Like loans done before '08. And look, if you literally had a pulse and you had cash, you could purchase a home. It was very simple, very easy. and then there was something called an appraisal, right? So we all know the appraisal for the bank is to go out there and appraise for the value. But there was no monitoring going on for banks nationwide, for appraisals nationwide, and it led to unfair lending practices. So you think the really sweet mom and dad that are both teachers and they're buying in a really great neighborhood, they don't realize all the homes have been inflated value around them because appraisers were manipulating values because they wanted to get paid. They wanted to stay in the good graces of the big banks. And then you had families that were going out that really didn't have the right credit scores. And maybe they had money that maybe wasn't in the bank, maybe wasn't undocumented in the bank, and it was coming from a bunch of weird areas. And what they were doing was called verbal income verification. So verbal income verification is this. I would call you, Jim, you want to buy a house, and you just say, look, I make $30,000 a month. And that's all we did to verify.
Wow.
So it's a wild time, right? So come to find out, like Jim, if we were to really dive in, it's like, oh, Jim, you don't make 30,000, you make 3,000 a month. Where's the other 27, right? But we weren't verifying it because there were all these other loan programs that were out there.
Wow, I didn't realize how the buyer quality or lack thereof getting loans by just their verbal income. That's mind-bending.
Can you imagine this? Look, so like someone who's paid cash under the table all the time, right? Like they don't want to pay maybe taxes and that's great for them, right? But they're out buying 3, 4, 5, 6, 7 different properties, and because they have a lot of cash, they can buy it, but there's no regulating going on, right, on those buyers. But what really, really happened in '08, it was unfair lending practices. So you had lenders that were super corrupt. They were taking advantage of a lot of families, and they were putting them in loan programs like something called a negative AM. So you would see like a negative amortization loan. So somebody would be making their monthly payment, but there's negative interest being added back onto the loan. They're not paying enough. They're not paying enough on the monthly basis to even cover that amount. And so you found families that were qualifying and they were being sold. Some of them didn't realize what they were signing. And I know this being in mortgages, sometimes you deal with families that are just wanting to deal with the lender that's just going to be really honest. There were a lot of unhonest loan officers and mortgage bankers and bankers out there that were looking at families saying, look, they don't really know what they're signing, but we're still going to get them to sign. So they were in all these really bad programs, and some of them moved on to the next house and still kept it as a rental. Before they know it, right, the big shoe had dropped, and the banks are calling those notes due in full, saying, look, you are 150% upside down in your home. Like, your home is not worth what you borrowed. we need you to pay it off. So families filed foreclosure, bankruptcy, that all this stuff went back to the banks. That's why you and I, when we met, right, we're helping a lot of families that were just coming out of that bankruptcy, foreclosure,
Right.
and they were just barely outside that scope where they could qualify for a home now. Now, let's fast forward to where we are, right? Like we jump into where lending is now. We are more regulated than food is. I mean, it's probably over the top now. We swung from like no regulation to an unbelievable amount of regulation. Nowadays, it's different. I mean, you want to go get a traditional mortgage, you can't do one of those programs on a traditional side. Now, some of those programs are there, but it's very tough to get qualified and push through some of those programs.
Touching on the appraisal process a little bit, that process now is drastically different to where you're disconnected from it as a lender.
Yes, look, so like this is the big thing every month, right, Jim? We have a deal together. What's this? Hey, when can we get the appraisal by? Hey, when can we get the appraisal back, right? Hey, do you think we're going to run into an appraisal issue? So we have a third-party mediator now, like an appraisal management company that has all the direct communication with the appraiser. I physically can't pick up the phone and call the appraiser and have a conversation about value, about things they should overlook. If they do, I would lose my license. So nowadays, right, we have a third-party mediator, which is great because they help manage the expectations, right, with the appraiser, and they can set the turnarounds on how fast we can get appraisals back. And I think there's good, bads, and uglies of it, right? And not even to go down to show, right, how expensive it's gotten on appraisals and what it takes for an appraiser to even get into the game now. But they're under so much more regulation. And the word out of a lot of appraisers' mouth is this, like, look, we can't manipulate the value. Yes, there's a point of this. This is a opinion. And so if you had three different appraisers appraise the same home, they might all be the same within $10,000 or $20,000, right? Depending on the comparables they used. But they all have to use the same formulas, right? Maybe they missed a comp that was in the neighborhood that was better, right? If you appraise low, but there's a piece to this that says, look, just because you have three people willing to pay 40% above list price doesn't mean the home value is 40% above. We have to protect the other homes in the area. So if someone really wants for that, they need to have the cash difference.
Exactly. And touching on the rental aspect, something else I was kind of thinking about as well. The what is called non-owner occupied investment properties. I mean, that game has drastically changed as well.
Drastically.
I mean, you used to be able to buy a rental property with 5% down conventional, but that now is a minimum of 20%. And then after the first four, it goes to 25%, 5 and after.
Yeah, and you're absolutely right. So the person buying is 20%, right? Maybe when they start looking at closing costs, everything else they got to do just pull it off. It's like 25% total to purchase the home now. This is nationwide, and here's why. The government looked back and said, look, we are taking on too many second homes, and investments nationwide. We need to slow down purchases in order to give regular families a chance. So they increased how expensive it was going to be for someone to purchase an investment, and they did that about a year ago. And they just officially went into effect over the last few weeks for second homes, how expensive it is now. It's almost as expensive as an investment purchase in some cases. And then for other families, right, they just say, look, we can actually find a home now because we have less investors trying to buy these regular residential homes in the neighborhood. And honestly, to a degree, I somewhat agree that they were trying to slow down the investments. Having these big corporate companies come in or investors that were buying up, they already own 30 homes, they're buying another 20 or 30, right? They're taking those off the market to allow regular families to own and operate. Well, I think this, look, I'm a big component of free trade, capitalism, that people should be able to go out and be able to do that. Yes. But they did a right degree on the investments to try to help slow that down, and that people who were going to get in it, just think about this. Oh, wait, it didn't take much to buy an investment. Now it takes a lot of money, and they just made it a little bit more expensive. So if you're gonna buy an investment, it's just really got a pencil now for people. Yes. So they aren't just buying the ones that are a really great deal. Like they have to be a really, really, really great deal in order to make the purchase because it's such a big financial contribution to purchase the home.
Yeah, no, that's drastically different as well.
The best advice that I'm telling families is this: if you can purchase today, purchase, because I promise you that you'll be able to lock in your rates today and be able to hedge against inflation and
Yes.
be able to control what I call your survival number and keep your bills as low as possible, because two things are always going to be true, right? If things are going to get more expensive, and if you don't control the bottom line, you will be forced to have to make a move somewhere where you don't want to be. So maybe you move today where other people aren't willing, so you can live somewhere down the road where other people can't, because you made the decision to take a leap into getting pre-approved. But you got to start now. Like putting it off another 2 or 3 years, like I can only imagine what you and I have seen
Oh
right
my
over three
God.
years and seeing the drastic difference.
Oh,
When we've seen a lot of families change their lives forever for the better, who made
yes.
the move the last couple
Yes.
years. They
Yes.
are in a way better financial spot today than they were 2 years ago.
Absolutely.
Now look, if a family wants to go and purchase a home, I am all for it. I think there's going to be a really great opportunity because rates are going to continue to rise over the next couple of years. In my opinion, this is just my opinion, and we might have an opportunity down the road, but I don't believe we're ever going to see again rates in the twos or in the low threes. I really don't, and I hope I get proved wrong by that because it will help a lot of families. But I just don't foresee it with everything that's going on nationwide and us learning hopefully from our mistakes.
Well, I know I was talking to you earlier, so just I know you're not able to. Every story is different from a rate perspective, but just kind of a standard cookie cutter, no cost rate. You're saying is what, 5.25, 5.5? What do you think
Yeah, and
you're
I
going to
think
see at the end of the year? Also,
shoot, so you can even see this on, so people can fact check me. CNBC, CNN, Fox, Housing Wire, they all released over the last couple of weeks that we're in the fives, right? And they had projected potentially in some of those articles that we'd be in sixes by June, and we are tracking for that. We are tracking for that, and I hope it slows down to a little bit of a degree, not such big jumps. But there's a chance, right, that some of the articles that I'm seeing out there are you're going to hover in the sixes, maybe up to the eights long term, and maybe we go that way for 2 to 3 years, and then maybe there's a chance to come back down to where things are maybe today, but not the degree that we saw over the last 2 years,
no, very
right? So
manipulated. Yeah.
yep, very manipulative. So if we let the markets react and do their thing, we'll end up back to where rates were back in the 90s. And you remember, right? Rates were up there, and it was in the teens. And maybe we get there, maybe we don't. But I definitely know we're going to get on the higher end. We're going to see something we haven't seen in a long time, and we've already saw it start at the beginning of the year. Where is the end? I don't know. And I'm not saying the sky's falling, but I'm
No.
telling people this is that you have to go out and buy. You have to pay somebody. And don't you think that if you're paying rent, you're paying 100% interest every month, and you're never accruing any principal, right? You're always
Absolutely.
paying somebody's interest, right? If rent is truly you're paying someone's mortgage, wouldn't that be you're paying 100% interest then, right? So I think for families, if they can go out, they can get qualified. They need to do it now.
Okay, understood. I'm going to put your contact information on here as well, Tyler. As always, I greatly appreciate
All
our
right,
time
thanks,
together.
Jim.
Thanks,
Yeah,
Tyler.
absolutely.
You're home. Both our passion.